India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Friday morning from the CNBC TV 18 Motilal Oswal studios. Yesterday was perplexing, and I think the question on everyone's minds is, should we read too much into it? Is this the start of another downturn? FI sell number was big, or should we just move on and look at it as a one-day aberration? I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, good morning.
Hi, morning, folks. Morning. One thing that, and for a change, I was actually waiting for that FI number to come. I was checking the exchange again and again. But one thing that this 11,000 crores of selling tells us that this is not a straight line. The behavior, whatever's going on, it's not a straight line. We all wanted to believe that it's over. Maybe not. We'll have to see. But then, hey, thank God it's Friday.
Well, that's right. But I expect, a couple of technical factors were at play yesterday. And I don't expect such large FI selling. So let's see whether or not that happens. But I think yesterday there are a couple of technical factors that play out. And I don't think that we're getting back to those big sell numbers. So December series, time will tell.
No, absolutely, Nigel. And I think that is the consensus as well, that, yesterday was an aberration and you should not read too much into it at all. You speak to people and they say, well, just ignore what happened yesterday and market should be better, market should be good. So we'll talk about that. Now, there's not very much by way of overnight cues to really take forward because last night US markets were shut. So there isn't that to keep us busy. Thanksgiving holiday, so Nasdaq and NYSE, bond markets, everything was shut. US futures were trading for a short bit, and I think futures were slightly higher. US investors, I said this yesterday as well, in the morning, same time, that they're by and large out for the week now. I don't think any of the larger guys are hanging around to trade whatever markets are trading on Friday. So you've got, in that sense, no US now till we come back next week. And in any case, I mean, activity starts to thin out as we get into December, especially in the second half of December. But Monday onwards, activity should be a little bit better. Now, as I said, US equity futures, small gains. E-minis, of course, also closed early. Cash, of course, was closed. You had European markets which were trading, and some of those markets were up. DAX was up 0.8, CAC 40 was up. That's a German and the French indices about 0.5% odd higher in terms of trade. Other headlines, I mean, there was sort of a comment from the ECB. There was the OPEC meeting, which was supposed to happen. That has now been pushed to the 5th of December and things like that. But these are all marginal headlines, not very much. Yesterday's big fall, and that started at 10:30 when the market just completely collapsed and never really recovered after that, could be expiry-related reversal of positioning and flows which came in earlier. Lots of theories doing the rounds, but that perhaps looks like the most reasonable sort of explanation out there. We'll get into this in greater detail in a bit from now. And the consensus is not to read too much into yesterday's price action, that this is not something new which we are starting. I mean, you look at a $2 billion net sell number from FIs and you start to worry. Well, that is not the way to read into yesterday's price action. So just want to make that clear. Now, levels which have not really changed. I mean, we've been in this range. The high has been for the last 4 sessions around 24,350. Instead of breaking out on the higher side, the market just broke down on the lower side. That's essentially what happened. So the 24,350 number, that coincides with the 40-day exponential average. That has been elusive. And 4 days, actually, all of this week we've spent knocking at that and then collapsing. Yesterday was no different. With yesterday's sort of cut on the Nifty, we've erased the Maharashtra election gap up as well. So Friday was, between Friday's close and Monday's gap up, there was that big gap, right? Because the election results came over the weekend. Yesterday, we've overlapped a Friday's high. So the gap is between Friday's high and Monday's low. And we've kind of overlapped. We've sort of filled that gap in that sense. What are supports now? You got to go back and look at some very near-term levels. So 23,800, 808 and 23,860. What is this? This is the 50 and the 61.8% retracement of the recent rise from the lows last week to the high this week. Just, 4-5 days, not even that. So this 50 and the 61.8% are these numbers, and these are the near-term supports that one should watch out for. So just 100 points away. And I think we're in that kind of a market. For the Nifty Bank, let's just put the levels out as well. The supports come in the zone of 51,271 and 51,774. This is the same gap area, which for the Nifty we filled, for the Nifty Bank we've not yet. So the support comes in that zone, and near-term resistance stands at about 52,760. This is the recent high that we saw, yesterday's high, by the way, that we saw for the Nifty Bank. So, those are some levels. The GIFT Nifty will come up on your screen. A lot of individual stock-specific action that we want to get to, and I think that's where the real bulk of the activity should likely be. Remember, it's anyway the end of the year. On top of that is the Thanksgiving weekend. Global activity, etc., in terms of volumes will be very, very thin. So be mindful of that. 36 odd points higher on the GIFT Nifty. Surabhi.
Absolutely. Asian markets are fairly mixed right now. And for us, through all the early part of the week consolidation, yesterday's fall, all things put together, we are flat for the week on the Nifty. So let's see. Friday promises to be an interesting session. Which way will the scales tip? Now, to talk about some of the data points that we have from Asia. Tokyo inflation numbers are out. And why is Tokyo inflation important? Because it's a barometer of, what is overall happening in Japan. And that will lead us to the BOJ policy action. And it seems the expectations are that a BOJ rate hike is not off the table, because those numbers are looking a little hot if we talk about the print that came out. So Tokyo inflation is at 2.6. It was at 1.8% in October. So a bit of an increase has come through. The core inflation hasn't moved up that much. This is more about, I think, fuel and food prices. Anyway, markets across Asia are mixed. So if you look at the hot boards now, so the Hong Kong market started positive, but it's faltering now. The Japanese market is okay. South Korea is down a bit as well. We've got industrial production data out of South Korea. It's not looking too great. So that market's also on the lower side. On oil, now geopolitical risk premium is very much back. The flashpoints, both Ukraine, Russia, there's been enough going on there with Russia attacking some of the energy infrastructure in Ukraine. And the headlines out of the Middle East are also not comforting, because there are repeated reports of a breach of the ceasefire agreement between Hamas and Israel. So oil is back up to about 73 thereabouts on Brent. That's a watch point. Now let's come home and look at this whole FPI business, the number that we're talking about, large sell number coming in, 11,750 crores. Now, technical factors, yes, it was expiry yesterday. We have to see how this plays out. Then you're getting into the end of the year. Yesterday, it's a big number, and the bulls will hope that this is a one-off. It is not a sign of more such selling to come, because we've had enough of this in October and for the bulk of November as well. Domestic institutions were buyers. Imagine what the market would have been without the support of that 8,700 crores of buying that came through. Anyway, in terms of action today, lots of F&O, and we will talk about that because there are 45 new stocks getting added to the F&O tally from today, and it includes a lot of the new age company names as well that were not available to trade in F&O. More coming on this in just a bit. Life insurance as a space will continue to be in focus, and we'll tell you more about this, because what did the insurers say to the story that we put out yesterday? That, look, if it is IRDAI and if there is any major policy change that has to be announced, it's usually through a consultative process. So the insurers are keeping the faith that there'll be no knee-jerk regulatory change with respect to the bank assurance channel, which is huge for these insurance companies. So let's see if there's any recovery from yesterday's slam dunk. Yesterday, the stocks were down 5-6%. Last but not the least, watch out for Z. Now, this is not going to materially change anything, but yes, the news is big. Shareholders have said no to Mr. Puneet Goenka, not even to be a director. So he's not, managed to get that approval. But just a couple of days back, Z told the stock exchanges that Mr. Puneet Goenka is going to be stepping down as MD of the company. He will only continue in the capacity as a CEO. So materially, it doesn't really change much, because I think this was anticipated, which is why he decided to step down from the MD's position. But it's a story that could keep the stock in focus today. So plenty to go through over the day, Nigel.
Well, we're almost into December, and the big question is, will Santa come to town in 2024, December 2024? I'll tell you what, last year he came in with a bang, because last December we had a big Santa Claus rally, and in fact it was even better than 2020 when you had the index that was up close to around 7%, but last year it was even better. The December series, we were up close to around 8% or thereabouts. And this after the last couple of series haven't been so great. Remember, October was a downer. November, we wanted to see a bit of a pullback. Initially, we saw that, and then we saw a sharp decline as well. But if you want to look at a bright spot, then in fact you'll have to look at the, at the Nifty Bank. Nifty Bank, in fact, for the past series itself, that was a bit of an outperformer in last series. Moving to the other couple of data points then, the rollovers. The Nifty bank rollovers, that's been higher than the average, while the Nifty rollovers, well, that's more or less in line with what we have seen. Now, the open interest at the start of the series is something that we normally look at. And at the start of the December series, the total open interest on the Nifty, it's a little bit higher than what we saw at the start of the November contract, but it's still far away from what we saw at October. So it's relatively heavier than the past series, but in comparison to the previous averages, it's not so heavy on that front. What about positioning? The FIs as well as the clients, they have been on opposite ends of the spectrum. And this time around as well, it's not too different because the FIs remain short, but they're not as short as what they were at the start of the last series. And the clients, well, they remain net long. Even in the last series, they were net long. Yet again, they're net long close on 2 lakh contracts on the index futures is what they're net long. Remember, they got it right in October as well when they were net short on the index and the markets did pull back. So I think the clients are still bracing for a bit of a pullback and they have been the ones that have been getting it right. So I don't rule out that December could actually be a far better series in comparison to what you've seen in the last two. On stock futures, they're both on the same lines. As we have seen in the last few series, of both the clients as well as the FIs, they're net long on stock futures. So individual stocks will continue to do well. Coming to the levels then, the last few sessions, I think for the last 4 sessions or thereabouts, this 24,350 mark has been a problem point. And just take a look at it. These are the highs that we have seen. So if we're looking at the resistance, well, this is the resistance, 24,350. Near-term levels that you're looking at, well, the immediate level will be the 20 DMA. We ended below that level in yesterday's trading session, so that's going to be crucial around 24,000 odd. We're seeing some green to kickstart trade, but you'll want to get past that, so that's going to be important. While the next level is the 200 DMA. Remember, in the past series, we went below the 200 DMA for the first time in more than a year and a half. So that's the important mark you're looking at. The Nifty Bank, as I said, for the past series as well, it was a relative outperformer. Very, very crucial levels come up for you on the screen. You'll want to see defend all these levels and, in fact, make a fight back. So the Nifty, well, it will be dependent on the Nifty Bank. That's the one that could lead from here on. And in terms of stocks that we're looking at, more fun and games because you have more number of stocks that will be available in the F&O market. And a few of them should come up for you on the screen. 45 scripts in the F&O market from today itself. And Zomato could be a stock that you're going to be looking at. It's going to be in the sensex. Now, in fact, it probably could get included in the Nifty as well. Another couple of names like Avenue Supermarts, Geo Financial Services, as well as Paytm, that's actually seen a big rally. So keep an eye out on these clutch of stocks.
Nigel, you're talking about Santa. Do you guys see that story? Santa's complaining of no snow in Norway, one of those Nordic countries.
Global warming.
Did you see that picture? He was sitting, Santa with his red hat. He was sitting there saying, well, not a flake of snow. I mean, that was...
Is that a meme or is that for real? I don't know. I haven't checked Norway's weather.
I'm assuming it was kind of just exaggerating to make a point that climate change is real. But I mean, so something to watch out for.